Okay, I got a new question, guys. It was, what is the difference between owning a property in an LLC or in my personal name? What should I do? Stick around to find out. I am Mr. Maciek, and right now we're going to be talking about what is better, owning property in an LLC or in your own name. So first of all, let me just say what you know I'm going to say. I am not a CPA. I am not a attorney. I am not your attorney. I am just a realtor and I'm just a YouTuber. So go check what I'm saying with your professional. Let's get started and I'll kind of tell you what I do on my properties and why I chose to do it. All right, so first of all, let's address what it's like owning property in my own name, right? What are the things that I have to deal with when I have a property in my name and when I'm about to acquire a property? So first and foremost are the loans. So am I buying it cash or am I buying it with a loan? And I like to use loans. I like to leverage my money. So here's what I basically do. As a real estate investor with a mortgage that I'm going to take out, if it is a Fannie Mae or Freddie Mac loan, then this is much more favorable because I get to have better interest rates and I get to have a lower down payment for the most part. And I know that whenever I go get a loan for a residence, it is really a clear-cut thing. I have to get insurance, I have to qualify for the loan, the property has to qualify, and then we're good, right? So getting a loan in my personal name is a lot easier. However, I can only get up to 10 Fannie Mae or Freddie Mac loans. I do believe that is the limit right now on how many loans you can have in your name at any given time. So first thing that I look at is it going to be in my name? And if so, my interest rates are going to be better. Okay, now the next thing is insurance. And I don't really understand the insurance industry well enough to explain why, but it's all related to risk. So when I am the owner of a property and I'm going to get an insurance quote, it's a heck of a lot easier to get an insurance quote in my name because usually it's just one policy and I have many carriers that will actually quote me. And every insurance agent that I quote it with has access to a bucket load of carriers. So I can go and quote it with 3 different insurance agents, and they're going to shop it with so many different carriers because it's in my personal name. I will qualify for a whole lot of them, and hopefully the property qualifies as well. So insurance is just generally a lot easier when it's in my personal name. Okay, now the next part that is really beneficial for having properties in my name as opposed to an LLC is about long-term capital gains. And if I have a property that I'm going to be living in and then selling as an investment strategy, then I definitely want to have it in my own name. And you should check with your tax accountant. But for my situation, I know that if I live in the property for 24 months out of the previous 60 months, then I'm going to qualify for some serious tax savings. Consult your CPA or your tax attorney to find out more. But this is all about an incentive for homeowners and non-investors. So here's the deal. If I own it in my own name, then I can save a lot on taxes. That's basically the bottom line. Also, if I want to save money on taxes with a 1031 exchange, then it's important to keep alive the name that it's under. And if I have it under an LLC, then I'm going to have to keep that LLC open for a long time. And if I have it under my personal name, well, I guess I just can't die. So that's really another huge benefit. If you're not sure what a 1031 exchange is, it's IRS tax code 1031. Google it and read about it. It is literally a huge, huge benefit for anyone who's thinking about investing in real estate for the long haul. There are so many advantages to this 1031 exchange, that you will probably be shocked. And I know that when Trump was trying to do the tax code changes, one of the things that they were fighting him on was to get rid of 1031 exchanges because they are so beneficial to investors. All right, I have one more thing to talk about when owning property in my own name, but please stick around to the end because I'm going to reveal a secret of the masters when it comes to the following topic: asset protection. Okay, so stick around. You're going to learn something amazing. But regarding asset protection, here's one problem with owning property in my own personal name. There is no asset protection. The corporate veil is non-existent because it's not a corporation. It's my own personal name. So if I own a property in my own name, I'm opening myself up and all my assets up to liability claims should anything happen with a certain property that might be an investment. That doesn't mean something will happen. It just means know that there is no corporate veil protecting me. And remember, there's a big secret at the end about asset protection. Okay, so now that we got that all out of the way with owning a property in my personal name, why do I hold some properties in LLCs? So the first thing that we talked about was about getting loans. And what does that really look like? Well, it's a lot harder. And by harder, I mean it is for a beginner investor, it's a lot more difficult because not only does the corporation need to have 2 years of tax returns showing certain amount of income on their books to qualify for this new loan, and if it's a new investment property, you're not going to have those books. It's going to be very difficult. But also you need a much higher down payment. So you need at least 20, usually 25% down. You know, when you own it in your own personal name, you can buy investment property for as little as 15% down. I mean, that's really a good deal. Here you need 20 to 25. And the worst of all with the loans is your interest rate is so much higher, a good half a point to a point higher. That's 1% point, right? Half a point or a point higher. So you're paying a lot more interest on the loan when it's in a corporation because, quite frankly, it's a much higher risk to the banks. Okay, the second thing we talked about was about insurance. And when it comes to corporate insurance, first of all, when you're shopping with different agents and they have all the carriers that they can write the policies with, there's all these different carriers. And unfortunately, just a small little percentage are actually going to consider writing a policy for an LLC. And then they're going to say, well, we only do liability and we only do fire and windstorm damage. So you're really looking at two policies, right? However, your liability policy could be put under an umbrella. Once again, I am not an insurance expert. I don't claim to be. So call your insurance agent and ask them about it if you have more than one property, how you can use an umbrella to protect yourself even further. However, just in general, I have found that when I move a property from my own name to an LLC, that my insurance rate goes up. Sometimes I've only seen it about 10%. Other times I've seen it about 30%. So it is more expensive to insure under an LLC. Correct me if I'm wrong. Maybe there's something I don't know about. But in general, my experience has been it costs more to protect yourself with an insurance policy under an LLC. All right, next thing is about taxation. Call your tax accountant. I am not your attorney. I am not a tax attorney. I am not a CPA. But here's what I do. So first of all, I usually buy and hold my properties. So I'm not taxed on the sales price. But if I was taxed on the sales price and I have lived in that property in the past 60 months, I don't get any discounts. I have to pay the full-blown taxes, right? So depending on if I have an S Corp or a C Corp, call your accountant about that stuff, your CPA. They're really going to be able to set it up properly for you, just like mine did for me. If you want a referral, I'll let you know who my accountant is. He's a great guy. So bottom line with taxation, overall, I have less advantages in owning in an LLC when I go to sell it. So honestly, I don't really sell my properties. I do sell some, but most of the time I just buy and hold. I'm a long-term visionary, and I'm going to be keeping my stuff for a very long time and collecting month after month after month after month. And I recommend you do the same. So the last thing I talked about was about asset protection. And once again, I'm not an asset protection lawyer here, but here's basically what I do to protect myself and have the maximum asset protection that I can with my current portfolio, short of setting up a trust and so on. So what I do is I keep everything separate. I do not commingle my funds. I do not commingle my bank accounts. I do not commingle anything. If I have a property owned in an LLC, then that LLC has a bank account, an operating account, and a deposits account. And all my security deposits and last month's rent prepayments, I put into the deposits, and all of my operating money, the rent coming in and all expenses going out, come from my operating account. So every LLC has two different bank accounts. And I just, I bank at Wells Fargo for now, and I just have some free accounts that they offer for small business checking or something along those lines. So this is one of the steps that I have to take, is not commingling funds, because it's important to know that just because I have an LLC does not give me a corporate veil. It's all about, how do I run my business, and do I run it as a business? And running something as a business means that you're not running it as personal. So if you have a credit card that's personal, you're not buying a single thing for your business from it. And you set up credit cards for your business if you want to use credit cards on your business. I just use a debit card linked to my operating account, keep things simple. So really, you have to keep everything very, very separate in case someone tries to pierce your corporate veil. Another thing that I do is I use software to manage my rentals. And at the current time, I'm using Buildium. Now, people say, it's a good software, it's a bad software. Look, I'm not talking about how good it is. I'm just saying that the importance of setting up software to manage your books. You can use QuickBooks, you can use a piece of paper or an Excel spreadsheet. But if you are professionally organized, then once again, that's harder to pierce that corporate veil should someone try to come after you for tripping and falling due to your negligence or something along those lines. Talk to an attorney that specializes in real estate investors, because they're going to just blow your mind about how to properly set yourself up for asset protection. And the more asset protection you have, the more it costs you on an upfront basis and on a basis of year after year after year, because you have to renew all these LLCs that cost money. You have to pay your accountant a little bit of extra to do corporate filings on those businesses. So it is more expensive, but what's more expensive in the long run is getting sued and not having a corporate veil and getting all your assets taken away, right? So look into that. Do not just go based on what I said. Don't do it the way I do it. Every situation is different. So consult a professional and really get some answers for yourself. All right, coming right up is going to be the secret that I promised you on how to do proper asset protection corporate veil. But one thing I just want to mention is, if you're thinking about doing a quitclaim deed and moving a property that's under your personal name into an LLC, I just want to warn you that if you have a mortgage that's a Fannie Mae or Freddie Mac, just read the mortgage paperwork, actually, the promissory note. And basically, if you have that and you transfer the deed, the ownership, to an LLC, you might be called upon with the due on sale clause, which basically means that you sold the property to yourself, and the bank might request you to pay back all the money that you owe, the entire principal balance. And I don't know how many days they give you, but I know a lot of people who have transferred the property from their name to an LLC, and they did not request a due and sale clause. In fact, I don't know anybody that's ever had this clause, used on them by the banks, because usually if you just make your payments on time, you're not sending any red flags. This is all owned by these investment companies that buy portfolios of loans, and as long as you're paying on time, they're good. So that's not to say they can't. So read your mortgage, consult an attorney with some advice, but basically there is a risk of moving it from your name to an LLC. Okay, so I've been talking to a lot of investors, and one thing that I learned about ultimate asset protection, which is something I'm going to do but I'm not doing at the moment, is really about the depth of the layers of your asset protection. So let me just give you an example on how you can set yourself up if you already own 10, 15, 20 properties. It might be worth it for you. Okay, so it basically looks like a big triangle. And at the top of the triangle is an asset holding company, and most people have recommended to make it a Wyoming entity. So you register a business in Wyoming, and this is an asset holding company. Now this branches out, let's just say, to 3 different LLCs. One of them could be a Florida LLC, another one a New York LLC, and the last one a Texas LLC, or some sort of entity. It does not have to be an LLC. And now picture each one of these 3 entities that own some asset. Could be in a different state that they're registered in. They don't have to own in the same state. So if you own a property in Montana and you get sued by a tenant, and that asset company is actually in Texas, it's owned by a company in Texas, and then that asset company is owned by the holding company in Wyoming, you have so many layers to pierce before it comes back around to you in Florida, for example. And then some states have sealed records where you can't just go online and search who owns what LLC. Now in Florida you can, but many states, they don't. They protect that stuff. So now you need a court order to attain the information of who owns the property. I don't know which state is the best. I don't know which state is the most expensive or the cheapest. All I know is that you basically create this big web of LLCs owning an LLC, owning a property, and you are creating more and more states that need to sign off on releasing the information of who the owner is. And if it's just a claim for, $20,000 or so, it's not going to go through all of that process. Now, if it's a claim for $1 million, 2 or 3 or 4, or wrongful death, they might go all the way. But I don't really know. I haven't been in one of those situations before, and I hope to never to, and I hope you never have to either. So the secret is to create the pyramid of a holding company registered in, let's just say, for example, Wyoming, branching out to different states, and each state's LLC owns a property in its own state or in a different state, doesn't really matter. And you basically have more taxation, but way more protection. So that is the secret that I have heard from very experienced investors. I hope that you can shed a little bit more light on it, and please comment below if you can. And please click this video now and learn about improving your credit score in a really quick amount of time, 30 to 45 days. There is a secret and you may not know about it. Please subscribe to this channel. I would appreciate it. Comment below and like this video if you found this of value. Thanks for watching. I'll see you next time.